Welcome back to the channel, everyone. Manny, Be Investing in BI. And we're going to take a look at a blog posting from Paribus, July 19th, 2022. Paribus Risk Management. Let's take a look at the accompanying tweet. Learn who to trust. Understanding how companies handle risk is extremely important when investing capital. In light of recent events, we take a look into TradFi versus crypto risk management and how Paribus avoids these issues. Last week, we looked at how market price and risk and return and how investors weigh up these levels according to their own appetite. This week, we decided to flip the perspective and see how organizations approach risk. It's easy to assume that reputable companies follow strict risk management policies. However, recent events have shown that organizations in crypto can be far more degenerate in their approach to risk than many investors. Whilst the media is happy to portray this as a systemic risk only within the crypto, it's actually far more commonplace in traditional finance. Absolutely. Take, for example, the recent collapse of the Three Arrows Capital, which was reportedly due to its over-leveraged positions. Although the exact losses of 3AC remain unknown, estimates range from hundreds of millions to a couple of $1 billion in losses. This was caused in part by the collapse of Luna, which wiped billions from the value of the holders in a matter of days. These shocking events cause serious problems throughout the crypto markets, and their effects are continuing to ripple outward, such as Celsius filing for bankruptcy, and the U.S. regulators and the mainstream media are using these examples to strengthen their claims that crypto is a much higher risk than any other market. However, it's not crypto that's a risk. It's traders who ignore risk management. In March 2021, Sung Hook Wang, a Wall Street investor who ran Archegos Capital Management, caused a similar problem by using over-leveraged trades on the stock market. He hid his massive exposure in floated risk management controls, leading him to lose in the region of $20 billion in 2 days, according to the Bloomberg News. Whereas Luna's collapse hit 3AC, which then hit Celsius, BlockFi, and other lenders in the crypto space. Wang's hit many well-known and respected institutional leaders. Credit Suisse lost $5.5 billion. Nomura lost $2.85 billion. Morgan Stanley lost $111 million, and UBS lost $774 million. This also caused significant drops in their share prices, which inflicted further losses on their investors. Although Wall Street is heavily regulated, as are the investment banks backing Wang, they all took a lax approach to risk management and oversight. This is actual systemic risk that financial instruments pose to the markets, irrespective of whether the median is crypto or TradFi. Whenever a person is involved in assessing the quality of a trade, human frailties can expose weaknesses. Wang's case is just one of many that are commonplace in investment banking. Some would even argue that the collapse of Luna in a 3AC indicates that crypto is maturing as it is attracting the same risk and flaws as TradFi. The unique value proposition of crypto, however, comes from its trustless and permissionless qualities. Its very DNA leads to the removal of middlemen and the removal of their human errors. Instead, smart contracts enable code to make decisions based on correct risk management rather than fear and greed. But understand that risk management has to be programmed correctly. So if you program crap, then you're going to get crap that's managing, just like in TradFi. It's pretty much the same. It's just that you can pre-code, verify the code, and determine that it will constantly make those decisions that it's programmed to make. When it comes to TradFi, it's just you have to trust a person to not be bad, which is way more difficult. There's no verification. There's no group programming. You can't program a person to be good forever. You can program code to be good forever. DeFi in particular overcomes the risk problems by using an over-collateralization. This means that if you want to borrow 1 BTC, you have to deposit more than that as collateral. When our MVP launches, it will be set to automatically liquidate any positions that fall below the over-collateralization threshold. By automating liquidity, the fear of upsetting or offending a high-value client is removed, and the process occurs without hesitation. This is critical or crucial when the market pivots. In the case of Wang, Deutsche Bank liquidated its position much faster than Credit Suisse. As a result, they incurred no losses, whereas Credit Suisse lost billions and suffered a 14% drop in its share price. Just as the automation of DeFi protocols enable people to quickly and easily take out loans or lend to liquidity pools, it also makes managing risk more effective. The moment a loan hits the liquidation value, it's immediately liquidated on the open market, even in the case of black swan events where pivots occur quickly. This enables the loan to be repaid in full and prevents any undue risk to the platform. In centralized finance, such as 3AC and Credit Suisse, traders can be left holding the bag, hoping against all hope that the downturn will quickly revert and bounce off to the next support line. When that human judgment goes wrong and the supports fail, the collateral suddenly becomes a liability. In the case of 3AC, their $560 million worth of Luna quickly turned into $670. Due to the nature of Paribus, situations like this would never occur during normal operating conditions. These types of losses only appear in centralized finance, where humans can be easily swayed by emotions such as fear and greed. The beauty of decentralization is that risk management can be coded in, and as the treasury reserves increase in size, they can be adjusted sensibly. That's going to be cool, being able to adjust, as Paribus grows and builds and brings and onboards more retailers, institutions. Those pools become a lot better, and then your what you have to provide as collateral can be laxed a little bit, given the situation in the market and the people or the addresses contributing to the platform. So I can't wait to see that change launch happen, and then we kind of just enjoy and see it grow from its infancy into a mature product that's being used across the globe. That is our hope anyway. Nothing going on that makes me believe otherwise. Things are looking good. We'll talk to you on the next one, but make sure before we go, you hit that like, share, and you subscribe to the channel to get more content on Paribus. We'll see you on the next one. Peace.